Hey, energy enthusiast, Justin Carlson here, Chief Commercial Officer, East Daily Analytics. I wanted to review a recent transaction, OKE MMP. Thought it was, very interesting from a standpoint of a big move in the space. Certainly puts OKE in position with some of the big dogs. $18.8 billion transaction. Makes them the second largest midstream company by market cap, fifth largest enterprise value behind Energy Transfer, Enterprise, Kinder Morgan, and Williams. The market seems to be definitely interested in what's happening here and trying to evaluate what's going on. So that's why we're going to take a look at the asset base and then look at all of these companies combined. As I said, here's KMI, EPD, Energy Transfer, and EMB, both historical as well as our future expectations. East Daily builds these models based on an asset level buildup, volumes, rates, customers. We focus on supply, demand, and commercial operations of all of these companies, and so we really want to figure out how the infrastructure grid really connects the wellhead to the burner tip. You can see OKE and MMP down here at the bottom, so even the combination of the two is what gets us to the fifth largest behind these three. Still below KMI, although you can see our KMI outlook is a little flatter, and OKE is growing. Still not enough to surpass KMI, but I'm sure OKE and MMP management hope to change that with the combination of these two assets. You can see there's a mishmash of all the different both commodity types, infrastructure type, and basin exposure for all of these companies. So while at an outset they're all midstream companies, they are all very different from a standpoint of their exposure, whether it's be to natural gas, NGLs, refined products, crude oil, or whether it be to what basins they're actually active in. If we filter this down and just look at the two assets in question here, MMP and OKE, we'll get maybe a bit more focus on what's going on. We have OKE's growth at about 10%. Well, it looks, MMP looks a little bit of a more tepid conservative growth. It's actually about 10% too, growing to 499. That's on a quarterly basis, Q4 2026 relative to where they were today at about 462 actually on a quarterly basis. Again, OKE about the same from a 10% growth perspective, $1 billion to a little over $1.1 billion. You can see the two different companies from a commodity perspective are very different. And I think something touted by the management team when looking at the overlap of the assets is that they're a very diversified company, refined products and crude oil being 74% and 26% respectively of MMP from a refined products and crude oil standpoint, and then OKE being about 63% NGLs and the remainder 36% on the natural gas side. One of the things we'll talk about here in a bit is some of the opportunities and the synergies that management talked about $200 to $400 million in commercial synergies, $100 million of which they say come from costs, another $100 million on the low side at least come from commercial synergies. Bundling of NGL and crude service, creating demand pull dynamics around the blending opportunities and utilization of MMP's expertise in exports. So those are some of the stated commercial synergies. And you can certainly see, in this case, where some of that butane blending comes in, given that on the NGL side of the equation, they have both NGLs as well as what's down here in the infrastructure type fractionation. So we take raw Y-grade NGLs and we fractionate them, of which butane is a component of that process, or one of the byproducts, or one of the what you're fractionating out of the Y-grade, and that is blended into gasoline. And so that's one of the opportunities there from a standpoint of synergies. You can see that the infrastructure type, both companies have a lot of pipelines. The backbone of the American hydrocarbon grid are those pipelines, and they move molecules from that wellhead to that burner tip and are critical part of the infrastructure. MMP, from its standpoint, again, a little bit of exposure to the upstream G&P side of things, or at least those asset bases. Again, there may be some commercial synergies in terms of vertical integration there that may be helpful. Their G&P segment is largely contained to the Bakken and the Anadarko from a ONEOK perspective. And then on the as I said, Bakken and Anadarko on the basin exposure, MMP is a bit more other, meaning that they've got pipelines that traverse multiple basins. and are really key components in connecting markets, as opposed to being driven by a single basin. So you'll also notice that the Permian, OKE, both have limited exposure. MMP OKE, excuse me, have limited exposure to the Permian. That I think has left some analysts wondering where's the beef, and that's not a knock on the transaction necessarily itself. It's just that people, well, let's just be fair. If you're not talking about the Permian, it seems like half the conversation's missing. So that has been a conversation of topic. Although East Daly would argue there's certainly some interesting things outside the Permian with respect to Haynesville and gas growth and et cetera. But that's a different story for another day. At the end of the day, we also see something that's really not baked into these forecasts, but is an interesting byproduct, which we're thinking about, is the fact that we've got a lot of, let's say, export growth that may require us to start pulling from other basins besides the topic du jour, Permian and Haynesville, and sort of focus on those tier 2, tier 3 basins. So that's an interesting component of this that I doubt, well, I'm certain management isn't necessarily baking into their expectations of the market, but something that is an outside opportunity, I think that we could look at in the future. So that's the breakdown of their asset bases, just the generic overall profile. You can go and subsegment this. You can see I have OKE pulled down here. This is all the assets that OKE owns. So you can click through and see each one of those assets and the exposure. Further, you can filter. So on the OKE side, that NGL component of it is driven largely by Bakken and Elk Creek. You can see this is fiscal year 22 versus 26. Again, that's our outlook. $178 million in growth between those two fiscal years, 127 for the Elk Creek pipeline. Again, that is Bakken driven. So if I filter this out, you can see those two pipelines here are largely driven by the Bakken. So unfiltering that. We can look at our overall growth for NGLs, and let me take this off here so we can look at the overall ONEOK picture. Hasn't changed a lot. ONEOK seems to be one of those companies that continues to deliver or leverage its core capabilities and its asset base to continue to deliver strong returns. And one of those companies that even coming out of the out of the COVID, the downturn with the pandemic, is one of those companies that we saw a lot of opportunity in, given that, we expected a stronger rebound in that sector and in the NGL sector in general. So that's a bit of an aside, but some of the synergies, as I talked about, butane blending, and also the other segment is there is potential to reutilize export assets for LPG exports, and that lowering of butane blending costs. If we look at OKE, we have a model called the Crude Hub model, and it's a network model that looks at throughput from hub to hub across the grid. And we know that Seabrook logistics facilities are 960 million barrels a day of capacity, and it's only about 27% utilized, or at least that's our estimate right now. Meaning that if they could get that up to 75% utilization by leveraging their acquisition of MMP to create stronger throughput through that pipeline, that's about $200 million in gross annual EBITDA. So there's certainly some opportunities there where that is bid on providing bundled services. You could fill some of those pipelines in a better way by providing those bundled services. And then the other thing on the butane blending side of the equation is maybe a 5% per gallon transport and logistics cost savings. If OKE's network can be utilized, that's about $25 million of additional growth. Again, that is certainly not as much as $200 million, but nevertheless, it's a part of the equation. So there are certainly some upside in when we look at each one of those assets and break them down individually and start to compare the asset to asset and have a bit of a pontification over what's happening there. Or could happen there. We're going to continue to break this down for our clients. Look forward to some other conversations, and give us a call if you're interested. You can also email us insight@eastdaily.com. I'm sure you can go to our website. There's tons of forms to fill out. But again, interesting stuff to look at. Come check us out. Love to hear from you. Love to chat about the markets. So thank you very much.